God, it just seems like there's just two different types of conversations to have. It's like the world before the virus and what the hell is going on now, right? Because before, we were looking all over the world for investments. 20 years ago in the dot-com, in the internet world, when the internet 1.0 started, the U.S. government, in some moments of lucidity, that's not meant to be politically motivated, but they enacted some laws that kept the internet really here in America. So you had a lot of great brain trust companies started here and stayed here. Silicon Valley flourished. Everything was going on. But with blockchain, we're seeing a lot of these better opportunities were overseas, where a startup here in the United States was three 24-year-olds in the garage with dad's $10,000. In Europe, the blockchain startups are state-backed ventures. They're $100 million ventures.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey, and welcome to Layer 1.
Alrighty, everybody, we are back with another episode of the Layer 1 podcast. Awesome episode here for you today. We actually have two guests from Terraform Capital. But before we get there, gonna kick it over, as I always do, to Q. Q, how you doing today? You hanging in there?
I'm doing good. I'm what are we on, like day 7 of quarantine? I think I'm surviving mentally, physically. I'm kind of struggling, but right. It's good to have you on the podcast, man. It's been 2 weeks almost since they've seen your lovely face on one of these interviews. So I'm glad to have you back. We do have a great episode, like you said. We have Terraform Capital here. We have Mike Poutre. We have Ryan Fabian. But let's get to those introductions, guys. How are we doing?
Doing great, thank you. It's great to be here, Zach, or Q, and Mike. Thank you very much for having us. What an interesting time! Absolutely fascinating, terrifying, but fascinating nonetheless, and on so many different levels. Well, at least today we're on the West Coast, and we finally got some sun out here today. Hopefully, it warms up a little bit. It makes it a little bit easier to stomach everything that's going on. So, but crazy times.
Yeah, for sure. If you're on the West Coast, you can't complain about sun. If I'm in Pittsburgh, that's not fair. I feel like we get 60 sunny days a year, but yeah, definitely crazy times. How about you, Ryan? You hanging in there on your side?
I am. Yeah. Thanks, Mike and Q, for the intro. Also in Southern California with Mike, and it's interesting because the paradigm before the quarantine, it seemed like everybody kind of just did their mundane things. They came home, they sat on their phones on the couch all the time. Now that people are quarantined, especially in California, it seems that everybody just wants to be outside. I live very close to a hiking park, and everybody and their mother is outside hiking and out enjoying the outdoors and maintaining social distance. And it's just an interesting paradigm shift that everybody wants to be out now.
Right.
When you got to be forced at home, then you want to be out. But when you can be out, then you want to be at home chilling.
That's like the American in us, man. We always want to do the opposite of what the government tells us to do. So that I'm sure we'll get into that discussion. But Mike, did you have a question there? I didn't know if I got in your way.
No, not at all. I think the best thing to do probably is going to be to start with Mike and kind of your background before Terraform Capital. What is Terraform Capital, and then maybe get into a little bit of how you met Ryan, and then Ryan, if you can go into your very interesting background in intelligence and cryptography, that'd be a great place to start.
Sure, I'll be happy to. Yeah, Ryan and I meeting, that's actually a funny one. But my background, I grew up in northern Vermont, right on the border of Quebec, and I came out here. I'm 48 now. I came out here in '89 to go to undergrad at Whittier College, and it was when I realized that you don't have to endure 40 below winters, mosquitoes, humidity, black flies, no-see-ums, the list goes on. I was like, when I decided to get into finance, it was either going to be New York City or Beverly Hills. So I was done with the winters, so I came out here to Beverly Hills, and I fell in love with Southern California, and I just stayed out here. I've done all my education, working on my PhD now. I did my MBA out here. Started out as a retail broker for Smith Barney in Beverly Hills in the early 90s, and I owned my own brokerage firm for a while, and then during the last great unpleasantness about 10 years ago, ended up shutting that down and became a CEO for hire. I've at this point I've taken 3 companies public, run 3 publicly traded companies, been on the board of 5 or 6, chairman of several, and yeah, I've just really found my sweet spot in building companies and helping companies scale, get through points of inflection, reorganize, restructure, refinance, help them secure financing, do different things, and then understanding the capital markets the way I did, and getting the ability to run both a NASDAQ company as well as some companies down on the OTC. It really, you learn most by comparing, I think, in any walk of life, and that really brought me a unique skill set, which has led to a good career, so to speak. And so this is the 3rd fund that I've had. The first fund I had was a 40 Act mutual fund. It was an international fund, and did very well with that. And then I had my last fund, which you can see the sign behind me, Redwood Fund, was a friends and family fund that I started back in 2014. I closed that down in 2018, and we did very well with that, but the scope, extremely well, but the scope of it was pretty narrow. After one of the portfolio companies we had there, and we seeded and funded, was the crypto company, which Ryan and I had our first working experience together at the crypto company. It brought us around the world. We've been in this space for over 4 years now, but operating at some very privileged levels, I would say. If you followed the story of the crypto company, it was a hell of a ride for what we did. The company had we wish them the best of luck. For the time that I was chief executive of the company, we had a meteoric rise, and we experienced a great deal of success. And unfortunately, that doesn't seem to have followed the company since my departure, but we wish them the best. And yeah, so Ryan and I took our experiences from there, and then my experiences running a fund, and his experiences more on the tech side, because coming from a corporate finance angle, I guess you would say, my superpower is deal structure, seeing deals, knowing how to scale, operate, and move companies forward and drive them to a successful bottom line. Whereas when you're looking at, heavy duty tech, you get more than 3 questions deep, I'm going to start to struggle a little bit. So, and Ryan's the Zen master when it comes to that. He's the guru, he's the oracle on the mountain. So between the 2 of us, we've worked it out well. And Terraform has started out, it's a blockchain infrastructure focused fund. It's a friends and family type structure. So you have to know us, or we have to know you to participate. And it's allowed us, some great insights from around the world, because it just seems like there's just 2 different types of conversations to have. It's like the world before the virus and what the hell is going on now, right? Because before, we're looking all over the world for investments, and we're seeing whereas 20 years ago in the dot-com, in the internet world, when the internet 1.0 started, the U.S. government, in some moments of lucidity, that's not meant to be politically motivated, but they enacted some laws that kept the internet really here in America. So you had a lot of great brain trust companies started here and stayed here. Silicon Valley flourished, and everything was going on. But with blockchain, we're seeing a lot of these better opportunities were overseas, where a startup here in the United States was 3 24-year-olds in the garage with dad's $10,000. In Europe, the blockchain startups are state-backed ventures. They're $100 million ventures with veteran and seasoned executive teams on these. And so where it's unfolding, and because a lot of the smaller companies in Europe see the blockchain as a leveler of sorts that allows them to compete with the big boys in the new world of economy and finance, and help them catch up. But kind of getting ahead of ourselves. It's and how I met Ryan, honestly, we met at the gym. We both work out at the Equinox up here, and when we met, anyways, you can't really tell by looking at me now, because I've had a hell of a year and a half. I got really sick last year. I was in the hospital for most of it, but I used to look like him. We were the 2 toughest guys in the gym. We just ended up meeting and shooting the shit and started talking, and lo and behold, we both raced cars, we both raced motorcycles, and just kind of got along, and lo and behold, he was in the tech world, and we just kind of hit it off. And so that's how it worked. But as far as his background, I'll turn it over there.
Yeah, please, Ryan.
Yes, thank you. So real quickly, straight out of high school, I knew that I was really not cut out for the college gig. I went straight into the Air Force, and went through the rigors of becoming a cryptologic linguist. which at the time I had no interest in doing, but as kind of doors opened for me, it was clear that that was a path that I was interested in. So I went to school at the Defense Language Institute in Monterey Bay, which was fantastic. 2 years of basically 8 hours a day learning Korean. So that was a language, obviously.
Why Korean?
So it's interesting you say that. The way that the military tests your aptitude for language is they give you a battery. It's basically a test. They make up a language on the spot. They tell you the rules of the language, which parts mean what, where the verbs are, etc. And then they just speak gibberish, and you have to decipher as much as you possibly can. And it's a little bit on the what we call, cryptography, but code breaking side, but also how well do you manage your language, right, in your brain, and can you deal with changes to your own grammatic syntax, which is really what the more difficult languages do. So I apparently scored very high, and I had no idea why. And when I went to choose my language, I wanted Italian. I wanted to be, in Italy doing, liaison work, things like that. And they denied me because I scored too high. So they said, you have two choices. You can either go Arabic or Korean. Those are the two category 5 languages that exist for a native English speaker. And it was easy. I didn't want to go to the sandbox. So I said, I'll go to Asia. I'll have fun over there. So it was an easy choice there. Korean, I thought would be very difficult, but for me, it seemed like it was kind of one of those, I was just a sponge for it. I enjoyed it. The school time at the Language Institute was amazing. Breezed out of that. And coincidentally, it has a very high attrition rate. So our school, our class started with 60 and we graduated with 10. So it's a crash course. I mean, it's a fire hose of learning every single day, hundreds of vocabulary words and syntax. So from there, as a linguist, you go directly into, coincidentally, cryptography school, and you do just under a year in, learning a lot of the basics of cryptographics and how those are used, not just in like mathematics, but also in military aspects. Obviously, you're focused on military. So I did that. That was in Texas, and I spent 5 years total in Korea. I lived there. I was fully immersed in the culture, and that increased my aptitude for the language even more so. So I was getting to about the 10-year mark. I did my undergrad in the Air Force while I was in. I just did that on the side in business management, just something to get out of the way. And the last 2 years of my career, I had an opportunity to do a special duty at an agency on the East Coast, and I'll keep that agency unnamed, but you can imagine what it is. It's in Maryland. So I did 2 years there, right about the same time that the Snowden event was going on. And the interesting part, I'm always careful to sanitize as much as I can when I talk.
Give us the declassified version. Come on. Here we go.
Yeah. But
you can speak in black spots.
Yeah. The really interesting thing about being there during that time frame was the fact that what you didn't really see a lot of, whether you think that was a good thing or bad thing, that's neither here nor there. What it did was it created a national conversation around. We had discourse around something that nobody knew about. So regardless, good or bad, that happened. What wasn't really shown in the media that much, and something that I thought was really interesting, is the absolute just split and sunder of the organization inside of it, because of people thinking it was a good thing and people thinking it was a bad thing. And the reason for that, I think, comes down to the fact that in anything classified, in anything at that level of secrecy in the government, you have and this isn't tinfoil hat, this is just my take being in the inside. You have an incredible amount of compartmentalization. So, and you've probably heard the term, it's a need to know basis, right? Everything is need to know. So you don't know anything that you don't need to know, which keeps things separate, and it keeps people, it gives people plausible deniability. It gives people, it keeps things safe, right? It is a very good method for doing that. The problem with that in this instance is that a lot of other cats got out of the bag, and where you had a department doing X and Y, they did not know that those items were being used by department over here to do Z. And that was like, wow, I did not know that the things that I made here were being used over here for this reason. And so there was this massive just split of people to where some people thought that we needed to address this internally. And some people thought, in a very, I call it kind of a brainwashed, just not even asking the question. Like the question, obviously questions need to be asked and there should be answers at that point. But there were both teams essentially. And it was, that organization has unofficially tens of thousands of employees. So that many people involved in having this major split of what should we do now and infighting caused a lot of problems. And that was partially the reason why I decided to get out. I was also trying to cross-train at the time to do Air Force Rescue. And they had this big stop loss on anybody intelligence career field had to stay put. They couldn't move. So I said, well, you're losing a 10-year veteran, or you're going to allow me to be an operator and go to Air Force Rescue, which I'd already passed. Everything was fine. My packet was already through. So they said no. Everything's a statistic to them anyway. So they said no. You have to stay where you're doing. And I said, okay, here's my papers. I'm out. And I immediately, if you're a military member with that level of access, as soon as you put papers in to get out, you're inundated by all of the other defense contractors wanting to make something happen with you. Take your experience and your veterancy and go do something for a lot more money. And that was tempting at first. But I knew it was I'd be right back in the same position and answering to the same God, just in a different uniform. So I decided to cut ties completely, came back. I was in Maryland, came back to LA. I went through my grad degree. I got my grad degree at Boston University in CIS. So I came back to LA. I started working for an agency here in LA. Got into more of the high level architecture of technology. But back to just being at the agency, I think that's where really the reasoning for my working with Mike now is because during that time I had a lot of hands-on experience with dealing with writing, deciphering, trying to do things with in all things cryptography. And as I mentioned before, I think U.S. Cyber Command was just getting spun up at the time, and so they needed people to assist with vetting others coming into that organization and creating, what we have now as our cyber defense and cyber attack force. So that's my background. That's where I come from. Just to speak a little bit on what Mike said, the majority of people that we have talked to in the fund land, excuse me, have a lot of background in capital markets and finance, but very little to do with technology. And cryptocurrencies fit a bill that is close to capital markets, but with some minor differences. But when we're a focused blockchain infrastructure company, that's well outside of the currency and financial kind of vertical, if you will. And so we have a particular view and perspective on these companies because we can not only speak to their business acumen, their business model, and the way that they operate on that level that Mike can kind of vet, but I can get into the code and actually walk through with these developers and these CTOs to see if this is something that's viable and scalable and that we can manage to bring them to market, to grow them to the nth degree. And we've seen many companies that are there and that have that potential. And we've seen others that, for lack of a better term, that are scams and that they have a beautiful front end, can wow you all day. And if you don't understand the technology, that's where you're going to get tripped up and you're going to think it's an amazing product, but it's a cardboard, front. It has nothing behind it. So, yeah.
So what an introduction from both of you. I feel like we could have a whole nother episode about all of your guys' backgrounds, as with a lot of our guests, but specifically with those two, man, that was great.
Thank you.
Do want to talk about like current events and how they relate to kind of your guys' experiences, specifically as it relates to maybe the .com bubble in the 2000s, I think, and then the financial crisis that we had in 2008. Me and Mike were kind of just coming into adulthood, or just adults as that 2008 crisis happened. So it goes to without saying that we didn't have experience with this .com bubble and how it relates to what happened maybe in crypto in 2017, 18, and how it is kind of related to what's going on with current events in crypto right now. So as far as your experience, maybe having gone through that 2000 and then 2008, what's going on in crypto and how does it relate to those times with that tech bubble and then the financial crisis in 08?
Good question, Q. And I think I'm probably the only person on this call that was around in active business for both of those. So, screw you guys for making me feel old.
It's a young industry.
Well, no, it's actually it's very poignant. It's one of those things we talk about because when we do talk with companies, it's one of the lines we invariably use is that we know how to duck from a punch in these areas because I've been punched in the face 100 times, and it started back then. So I remember when 2000 happened, and I remember I was working for a small retail firm. It was smaller. It was a regional one called Van Casper at the time. I was one of their portfolio managers, and I remember looking at Enron when it was 8, going, "Why the hell is Enron down so much?" And watching all that stuff unfold. With respect to, what happened in 2000, one analogy that has been asked of me recently with respect to this is that, okay, as the economy is slowing down, and right now we're all in hibernation, so to speak, and nobody's doing anything, and there's no big capex going on right now. Nobody's spending any money. So, will we get, will the rubber band, revert to normal once we are able to go out and start doing stuff again? People are going to start spending. Will there be, a retail boom as we start to come out of our houses if we can and do things? And in the year 2000, like when the market peaked and crashed, and NASDAQ peaked at like 51.23, something like that in early 2000, and then got absolutely decimated. As we all know, everything got crushed. And there was about 3 years, 2.5, 3 years, in the tech cycle where nobody had money to invest in new capex for technology and bring that up to speed. And at the time, everyone was still focused on Andy Moore's law, which is that computing speed doubles every 18 months. And so you went through 1.5 cycles of really generations of computing power, right? And where people who were cutting edge companies for this stuff were now all of a sudden, they didn't have it. So there was a forced massive capex spend as we came out of that in 2000. And that, they say in these types of markets, tech leads in and tech leads out of a bear market. And so in that instance, the tech companies were some of the first ones to see some of those big dollars go in and spend for, your big mainframe stuff and stuff that was going on back then. And we will see some stimulus here this time. I mean, they just announced that, people are going to get like $1,200 provided you filed taxes last year. And so that's a retail stuff. That speaks more, I think, of the, when 9/11, when you see Bush saying everybody go to the mall and spend your money and get stuff. And you're going to, the massive, the stimulation package is going to be huge. So there will be some demand provided this, this eventually gets better. And, Ryan has been a good study and student of the events of what's going on, and I tend to follow his thoughts on this, and that he thinks that there may be some pockets of sun right now, but there's still a perfect storm coming. This is going to get worse. It's going to get harder. And it's going to be a tougher pill to swallow. People are going to get nervous. The markets have rebounded a bit. We expect them to go back down, and we can talk about that vis-a-vis gold, vis-a-vis Bitcoin and whatnot. And then with respect to 2008 and the financial crisis, what's interesting and what is nuanced, I was thinking about this the other day. So in 2008, you had the fact that it wasn't that society stopped, it wasn't that industry stopped, it was that there was just no more money. It was literally evaporating in the walls of the institutions that we trusted to keep it, right? But everything else was still working. In this instance, it's not that. In this instance, there is money. There's just literally no industry. There's no economy because everything is stopped. It's the antithesis of that, so to speak. So it's it's hard to draw a conclusion from that. I mean, it looks similar, but the causality is entirely different. It's entirely opposite. So it's we're really relying on social contract right now. And social contract, according to Lockean theory, is really three main legs. You got food, power, and water. And you remove any one of those legs, and it falls down quickly, right? So, it's fascinating times where we are. I don't know, Ryan, if you had anything you wanted to add to that, or if you guys have some follow-up questions.
Yeah, no, just, real quick. And then Ryan, I want to get to you kind of on the tech side of that metaphor between, what you've seen in 2000, looking back on that versus maybe the ICO boom or where we stand today in crypto. But first, Mike, it's interesting you kind of bring up the difference between 2008 and 2000, I guess 2020 now with the coronavirus. I think you're exactly right, because what we're seeing with the US dollar is really a supply shock, right? There's not enough US dollars to go around. And I think what a lot of people are theorizing is that other countries outside of the US are gonna kind of be starved for dollars there. So as you kind of use that experience from 2000 and 2008 to, as best as you can, predict out where the economy goes from here, and having seen that the great financial crisis in 2008 took 4, 5, 6 years before kind of the full recovery of stock market price came back around, how far do you think we are, if even possible, to predict right now from that kind of shining day, right, versus kind of the just pockets of sunshine as you alluded to?
Well, it's interesting. Good question again. So in the history of the stock market, if we look at the data, there's been only one 5-year period, rolling 5-year period, where if you picked the highest level to invest in, like the highest peak of the market, and move forward 5 years, you didn't make money. All right, going back through history, and even going through the Great Depression. And by the way, the Great Depression is a really good example of the U.S. government taking draconian economic measures to get us out of that, because prior to the Great Depression, Americans, I mean, you guys probably don't know this or don't remember it, and your parents probably won't either, but it used to be illegal for U.S. citizens to own gold, to actually own gold. And that was prior to the Great Depression. Everybody was allowed to own gold. And the reason that Fort Knox was built and has all our gold is because FDR, in order to try to get us out of the Great Depression, made it illegal for U.S. citizens to own gold. They had to go all turn in their gold, their bars, their certificates and whatnot. And he paid everybody $20 an ounce. And once he got every single piece of gold in the United States, they upped their reserve, they upped the price of what they're paying the gold to $36 an ounce. And that's how they financed the New Deal. So they took it all up front, and then they built Fort Knox to house all the gold. But that's how they financed the New Deals. They took everybody's gold, paid them $20 an ounce for it, and then once they had it all, they said, "Well, we now recognize the value is $36 an ounce, an increase of 80%," and that's how they financed everything. And so they took it everybody from all the taxpayers up front, literally. And this one, we're paying for it on the back end because, I mean, yeah, they're giving us fiscal stimulus money, and they're printing all this money, but we're going to pay for it all with our taxes down the road anyways. So it's interesting to see that works, but to see how this is going to leach forward, I think it really depends on whether or not we find, and I would defer to Ryan on this, but whether or not we find a vaccine that can be replicated and disseminated in any sort of reasonable fashion. And because right, I don't want to misquote stuff. Ryan had some stats on it. I think it was like, I don't know, Ryan, what were you saying? Like eventually 90% of us will end up getting this?
Yeah, I mean, ultimately, just the way that this is spreading, we will most likely all have gotten this disease, or a very high percentage of us all have gotten this disease. And the reality is what we know, and this is all just CDC information and WHO information. But the reality is that you have such a varying degree of how it affects certain individuals. Some individuals may feel like they're kind of sick, and they'll get over it, and their body creates the antibodies, and they're done. Some individuals might have to go to the hospital, but they'll be out. And then others have to be put on a ventilator because it's just they have immunocompromised, or their lungs are a certain way, And since this disease is a severe acute respiratory syndrome strain, we have, shortage of ventilators and things like that. So the point I think that Mike was making there is that we have a long road ahead of us to get out of this to where we're back to normal. And I say normal in a way that I want to point out the fact that I think that this is also going to have some good positive effects, side effects moving forward. And that has to do with how we kind of handle our hygiene. I think that most people have overlooked the way that they handle their hygiene for a very long time because there hasn't been, sure, I got the flu. I came out of it. I got sick for a couple of weeks. Great. I didn't die. A lot of people do die to the flu. Don't get me wrong. But most people aren't afraid of the flu like they are the coronavirus. This is really an opportunity for people to really think about the way that they deal with their own personal hygiene. And the way that we, wash our hands and touch things and think about that now is I think, drawing a lot of attention to that. But in terms of timeline, even if we did come up with a vaccine that was perfect and it was done tomorrow, we would still see another 12 to 18 months of production and dissemination that it would take to get to the multitude of masses waiting for it. Not to mention the costs associated with that, where would that come from? Obviously, we would all be paying for that as well. So it's going to be a long road. And I think what we're going to see before we come out of it and see this event behind us, this is just my own personal opinion here. I think that we're going to see a normalization of business and society moving forward in a way where we handle the current status of things, as well as all the other things that we have to do. All of our businesses figure out a way. And you see it even now in the first week of quarantine, businesses are changing the way that they do things to adapt. And if they don't adapt, they will likely fail. Focusing all their advertising on deliveries instead, restaurants, staying open, maintaining social distancing inside the restaurant, but trying to push as much as they can out. Businesses moving all to, and this is obvious, but businesses moving all to remote meetings, remote viewings. Customer meetings are in remote, just over Zoom. And look at Zoom's value over the last couple of weeks. But things like that. And adaptation is key, and we're going to be in this for a very long time. So go ahead.
Yeah. No, that's fine. And I don't want to get too far off topic from what you guys are doing at Terraform, but I feel like every podcast could have a COVID tag because they're all talking about it. But do you guys see this as like a paradigm shift? Because a lot of people have talked about Asia's response to this, right? Like being a lot better than maybe the West. I think they might have had the infrastructure there before because they've had diseases, they've had SARS, they've had a lot of these things happen where they have that infrastructure there. Is this a time where they can, specifically China, can take advantage of maybe the U.S. having this shock to our system? And do you see that as like a possibility? Can China use this as a moment to maybe see the U.S. as being weak?
I think we could probably let Ryan answer that one for an hour because that question has conspiracy theories galore inside of it.
We've got all our tinfoil hats. Yeah. We love them.
But it's it's easier for China to control their population because they have hundreds of years of experience doing it in a very intense and strict manner. When you have a completely free population, that is the risk that you run. It's really tough. It's when, not to get off topic, but you look at, okay, Russia's a great country. Well, what would the Russian government look like if all their citizens were armed like ours? It would not look like it does now, I assure you. So yeah, with those countries over in Asia, it is easier for them to really lay out those types of laws because those populations don't enjoy the freedoms we do. That's not meant to be an eye-pokey statement. It just is what it is. And people can really don't want to get too political, with the responses on this because it's a zero-sum game to talk about that stuff.
Sure.
It's a crapshoot. You only get clarity and objectivity when you're looking backwards, not forwards. When you're leading, whether it's a company or a country, you have to make difficult decisions based on imperfect information. And there's a very legitimate, and again, I'm not taking sides there, but there's a very legitimate argument to be had that says, okay, you can save all the people, but if it destroys the government, it destroys society, how many will be lost in civil war? How many will be lost due to poverty and other things, as opposed to how much will be lost, if, the people who, could stand to take some extra risk did so to make sure that for the sake of the economy, we move forward and maintained ourselves as a sovereign country, and did that. Again, some people may look at that argument and say that's ridiculous. We need to do everything we can to save every human life. Well, you save every human life from that, but by doing that, creates a multitude of other issues that will take lives elsewhere. And to be able to game theory that out and judge which one is the best, in the amount of time that you need to make that decision, is a very daunting task. So you get clarity and objectivity only by looking backwards. So it's where we go in the future. It's kind of tough, but it'll probably, the way that these cycles work, typically we're going to get some rays of light. We've got a bounce recently. Everything has rebounded a little bit recently. We think there's definitely some legs down to go. We think the market probably bottoms around 12.5 or 15,000.
Wow.
I think Bitcoin's probably going to take another run down below the fives, maybe possibly to 3,500 or so, which, by the way, would be backing up the truck if that happens. And when it happens, even at these levels, it's still stupidly cheap based on what we know going forward. And then, when you look at the, I'll stop there because I could just keep rolling. I don't know, Ryan, if you had any comments to that, or if you guys had any counterpoints.
Sure. Go ahead, Ryan.
I'll just address the original question there on not speaking too much on the business side, because I think that there's always going to be camps in America, because America is one of the last bastions of defense for, the healthcare system that we have right now. But having gone through the original SARS in, the early 2000s, China, Hong Kong, South Korea, and you look at South Korea's response to COVID-19. They knew exactly what they were doing. Not to mention the fact that China, all those Asian countries, every single one of them, they have since infancy, they're taught how to be considerate to your surrounding, human beings, especially when you're so tight packed. And all those countries have very tight packed areas. South Korea's got 50 some odd million people in it. And it's the size of Indiana. Okay.
Wow.
So they have to deal with, when I'm sick, I still need to operate. And that's why you see a lot of people wearing masks. A lot of people don't know this. In Asian countries, when you're wearing a mask, it's not because you're afraid of getting something. It's because you have something and you're being considerate to your people that you and people around you, and you don't want to give that away. So we're starting to learn that. Obviously, now you can see everybody walking around with masks and gloves when they're sick and things like that. So I'm very hopeful that we can start to take a little bit of these learnings from the event in America moving forward. From a business side, though, I don't know that if we're getting into the healthcare business, that's a whole different story. And you're going to see proponents of, kicking Obamacare back into gear and also the opposite. And that's literally what's going on in the Senate, up for the stimulus bill. If you guys are paying attention to that, the whole argument was they were trying to add in a lot of aspects of Obamacare, free healthcare for individuals, which if you look with all that's going on, does it make sense to take care of all of our fellow human beings with, this situation going on? So those are questions that I'm not really qualified to answer, but that's, the current state of things.
Sure. Yeah, no, I think basically kind of the broad summary that we get from this is that, no one still to this point knows kind of, even where we are, right? Like testing is still a big issue in a lot of cases. There are fractures all over the economy, whether it's healthcare or general business or finance. And the coming weeks and months, I think, will kind of show us what we've done well and certainly what we've missed, and hopefully what we've, as you've said, learned from some of the countries who are maybe 4 to 6 weeks ahead of us. But kind of taking it back to crypto, which seemingly more and more over the last 2 to 3 years has kind of been thrown into the macro economy, right? We obviously saw the big boom with ICOs and with Bitcoin, and at the end of 2017, the beginning of 2018, went through what many considered a bear market cycle, which I would argue has kind of been pulled out by more of a institutional leadership, right? Like folks like yourself, Mike, who have come to the forefront to champion Bitcoin as a store of value or a digital gold. And, about 2 weeks ago now, or 2 weeks perhaps when you all are hearing this out there, has been since we saw that massive drop off for Bitcoin, where in about 2 hours it fell by over 40%. That was a steeper decline at that time than basically any other asset or any other index in the traditional market. So, Ryan, starting with you, based on your background from a tech level, from a cryptographic level, and what you understand, having learned from Mike or having seen in the economy and how crypto has moved into this macroeconomic lens. Do you think this kind of recessionary or depressionary event, this chaos that we're going through, will in the short term and in the long term be beneficial or more negative for what is obviously still a very nascent technology and nascent kind of currency of sorts in Bitcoin?
Yeah, that's a great question. I think that the fact that the mainstream adoption of cryptocurrency, and let's just talk about Bitcoin in general,
right,
has been, it's fairly new, mainstream, right? I would call mainstream adoption somewhere around 2017. So we're, 3 years into a mainstream adoption, and even then, it's really not that mainstream. We're low percentage of Americans that actually own Bitcoin, but everybody's heard of it, right? So I think that, and Mike does have some great points, and I'll let him get to this on specifically on, the value of Bitcoin in regards to, why it is valuable and why people saw value to begin with, compared to the way that governments have handled their own currencies. But I think that short term, we'll likely see a continuous following of capital markets in the way that people are trading. People are, in the end, even though you could believe in Bitcoin to, and be a guru spouting from the soapbox on the street corner, I don't think that it has the level of adoption that, just having cash on hand has. Like if I need something, I need some cash. It doesn't necessarily mean that my Bitcoin is useless, but right now where we are, if things start to go south fast, I would say that the value of Bitcoin would be less and less at the moment, because people are, and again, people are still afraid. And if we're going back to Mike's comment about social contract, let's play a hypothetical game real quick. Were that to happen, and were we to move into, a state of anarchy where social contract was dropped, we lost the critical infrastructure of the United States, and we were in a point where you had to make a decision on how you were going to survive. That I think is still in people's heads as a possibility here, which is scary for everybody. Right? None of us, no generation has seen this level of stoppage to the entire global climate. So what happens next is very much up in the air. That's more on the short term. People will still, I think, gravitate towards what they've known and grown up to be, let's call it real, right? I have cash in hand. I can use that to do X, Y, and Z for the moment. Now we can pull ourselves out of that hypothetical and look at, we get through this as a country, social contract maintains, we come out of it, everybody's been either vaccinated or they've gotten the disease and gotten better, so they have the antibodies. We will, I think that the general economy will take a very long time to recuperate, but people will have a deep invigoration for this alternative currency to move forward, seeing the value, seeing the long-term benefits of it, and knowing that what's happening with the stimulus and how we're going to fund that could be problematic in the future. So, and I'll defer to Mike a little bit on this, because Mike has some amazing insight on that particular question as well.
Yeah, please.
We'll speak about Bitcoin really specifically here, because you have, your three most liquid currencies are going to be XRP, ETH, and Bitcoin. But let's go with Bitcoin here. And if you look at, there's probably 30 million people worldwide that own some level of Bitcoin. But when you look at who owns more than $100 worth of Bitcoin, that number is probably less than 3 million. And so when you saw the precipitous, decline, it was a one-sided market, because you just don't have that many play. If you have less than 3 million people owning $100 worth, let's play that out. How many people own 1,000? How many people own $10,000 worth? It gets down to small numbers pretty quickly. Now, but what is different this time is that you've had massive capex in infrastructure in this environment, whereas, look, in the rush of 2017, the best quote that I came across was that, actually, it was one of our head traders at TCC gave this to me, Wes Hansen. He said, look, because we were building, exchanges. We had one of the first prop trading desks for cryptocurrencies in the country, and when TCC was publicly traded, I was the first CEO in SEC history to sign a 10K that contained an audited portfolio of more than 30 digital currencies. Even Overstock only ever had Bitcoin on their balance sheet. So we were really progressive in what we were doing. But, when we see so now you have massive, what Wes had said was that the exchanges at the time in 2017 were less like exchanges and more like Bitcoin or eBay for tokens. That's how slow and nascent they were, and they just could not scale. They could not handle even light demand by institutional standards. I mean, it's, people talked about being crypto traders, but you get next to a Wall Street trader and they have 200 years of experience and rip your throat out.
Right.
It's like, I don't know if you ever heard the joke that somebody was saying, like, the Chrysler 300 looks like a Bentley until a Bentley rolls up on you. But now you've had massive look, Fidelity didn't roll out their digital assets institutional desk with the anticipation that they were going to have any problems with the SEC. I mean, Goldman Sachs, you have everybody who's made some really significant investments in this. And one of our portfolio companies is actually helping one major Wall Street firm, develop dark pools for crypto. And so now you're going to, and at some point in time, the SEC is going to allow some 40 Act funds or some level of ETFs to exist from Bitcoin. When that does, you're going to have, true institutional dollars coming in. So as we're now down, we've come down in the price. You're going to have a lot more people that have the ability to get into it. So now the diaspora of people that own it will go from, for more than $100, even if you go from 3 million to 10 million, there's still over 3x change in what and where that is. And with halving coming up, provided it still happens, it's going to slow things down. So you have that finite amount, and you're going to have more demand. So we see Bitcoin actually really doing well coming out of this environment. So long as, again, so long as the lights still turn on, and you can use money for food and not guns for food, provided that happens, then Bitcoin is going to have a very good recovery coming out of this.
Yeah, I'm actually surprised at the answer to that question, because I feel like the heart of what Mike was trying to get at with that question was, can institutions trust the asset when the whole narrative was around digital store value and it drops 40% in the matter of hours?
Yeah, so those guys know that. They see that. They know what a narrow market is. They read that like it's the newspaper.
Yeah. Really? Okay.
Yeah. I mean, that makes sense, right? Like we do a live show every Monday where myself and Q and another colleague of ours talk about kind of the latest happenings in crypto. And obviously the last few weeks, it's been all about this topic. And what I touched on Monday was basically that, while kind of the cryptographic and technological and, really monetary policy aspects of Bitcoin have been strong and have proven to be very anti-fragile over a period of 11 years now. As you said, the infrastructure piece, right? The various components that allow Bitcoin to be a public market, traded asset have not, in a lot of ways scaled as the monetary policy and anti-fragility have. So you kind of see this, this fracturing or kind of this not matching up between the fundamentals, I think, for where Bitcoin stands to how that price is found. And as the halving comes up and as more and more people are out of work and in need of cash, I think you're right there that there's going to be some time first before Wall Street comes back in and sees that, this isn't just kind of like a quote unquote manipulated market. Right. But, I would tend to agree, right. Long term, very, very bullish for Bitcoin. So,
well, let's look at one of the major distinctions here that was an original intention of cryptocurrency markets, and now actually is slightly serving to disserve them a little bit. All right. So cryptocurrencies cut out the middleman, right? There's no intermediaries. So if you want to buy a stock, you can't just go to the exchange and buy a stock. You have to go to Fidelity or E-Trade or Morgan Stanley and open an account, and they will place that trade on your behalf. And they do that through market makers, right? Through their specialists and market makers, right? And Ryan and I are big believers in the true democratization of capital, and that the emergence of Bitcoin and cryptocurrencies came as a result of governments and banks, from time immemorial, abusing the right and privilege of currency. I mean, with the first people Jesus threw out, ever got pissed off at were the money changers at the temple, right? And so being able to remove the intermediaries altogether so that you have a true peer-to-peer transaction on every level of Bitcoin and cryptocurrency transaction, that's really great because it's complete freedom. But it also it affords very, very volatile markets. When you have intermediaries or market makers, these people can step in and they can regulate the markets. If a market maker sees that somebody's, let's say that there's an intermediary or a traditional market making side where you have bids and offers on like a level 2 screen, right? For Bitcoin. If somebody's coming in to sell, $10 or $100 million worth of Bitcoin, you're going to be able to see how deep and how far you can go and how much that will actually regulate markets. And then you'll be able to, and one of these market makers can then step up if they want to and take down the piece so that it doesn't negatively impact the market and sift it out over time. So some of those things that are perfected over 200 years plus of trading that help to, regulate and keep markets more fluid. Those things, they're absent in the cryptocurrency market. So it's a really good thing because you're not paying extra fees. It's a direct transaction and nobody can get in between you. But the downside of that is that you're going to have true auction environments. You're going to have, it's going to be more volatile simply for that reason. And a lot of times that is overlooked.
So Bitcoin's rightfully come to the forefront of most people's minds in the conversation. But Ryan, I want to throw this over your way. And you were talking kind of like of that fear index and how close we are to kind of those pillars kind of coming out. In times like these, what is the environment when investing in maybe companies that are within crypto that obviously aren't related to Bitcoin? How do you go about investing in companies at a time when everyone is so concerned with just like kind of that flight to safety? Maybe Bitcoin is that flight to safety, maybe it's not, but you guys at Terraform Capital are investing in companies within crypto. Where do you go from here? Do you just sit on the sidelines?
That's actually a really good question, and something that Mike and I had to come to terms with when we started this fund, and that is the reason. I'll go back to when Mike was introducing the fund. Our fund's focus and the way that we've written our PPM is specifically on blockchain infrastructure companies. Now that can easily seep into the vertical of cryptocurrency, but it is more of a focus on companies that are building things that have to do with using blockchain as a tool to change industry in their specific vertical. So that can be anything, any vertical whatsoever. And one of the best cases for this, although not a portfolio company of ours, was something that that really kind of gives us an opportunity to talk about, and other companies when they bring their own model to us, is Maersk. Maersk is a shipping company, as you know, one of the largest in the world, and they have teamed up, I'm sure you know this maybe, they've teamed up with IBM Blockchain to build their new technology called TradeLens. TradeLens is a blockchain-based supply chain management system. And the reasoning for it, and this is out in Maersk's case study for this specifically, was to reduce the number of hands-on signatories and inspections that needed to occur for any given shipment to take place. So an example was a shipment from South Africa to the Mediterranean, anywhere in that, it really doesn't matter where it's to or from. Any individual ship, one single container on an entire ship would generate somewhere around 200 signed, viewed documents that had to be then stored or digitized in some manner to be able to, be brought back up if necessary. So there was a huge opportunity for them to take their own private permissioned blockchain and create a system called TradeLens that can be disseminated to all the different ports and nodes that any shipping container would actually be stopping at, and make it extremely easy. And their forecast for savings on this is somewhere in the tune of $1 billion or $2 a year just saved in paperwork, right? So those types of applications are really what we're setting out to do. And companies doing data aggregation on a massive scale, or using deep learning models and neural networks to do predictive technologies, or to use AI in a manner that allows you to have better speech recognition. Any of those types of verticals that have some touch point on blockchain and how they do it is something that we want to not only invest in, but push and build and help grow to show the benefit of that. And I think this more people understanding the difference between cryptocurrency and blockchain is going to be important, right? It's a lot of times those two are synonymized, but this will inherently and is already moving into finance, not in just the cryptocurrency land, right? Financial organizations are using blockchain in other ways that can free up, any place they're using a ledger essentially, and automate, and doesn't need to be public or a non-permissioned. It can be a private permission blockchain inside their organization. So those are the types of things that we look at. Cryptocurrency is definitely on the table in terms of looking at companies that are doing something in that realm. But we've specifically kind of kept ourselves away from using our funds to put into direct crypto assets at this moment. So we're trying to build the community and build the actual the global drive on blockchain usage, whereas cryptocurrencies have their usage, right? They are definitely special in their own right and will continue to be moving forward. So.
Gotcha. Yeah, I have one final question for you, Ryan, one for you, Mike, and then Q, I'll pitch it over to you. I know we're running up on time here and you guys have to run, but Ryan, taking that kind of a step deeper, right? As you look at really kind of the impacts that broadly blockchain technology have on various industries across the globe, is there something in particular deeper, in that blockchain technological level that really excites you today, understanding that, Bitcoin is proof of work, right? Ethereum came out, introduced really to the masses proof of stake, and privacy has been something that's really big. Obviously, you've got an interesting background to comment on that. But if you could kind of narrow it down to one thing that is the most exciting within blockchain technology or crypto, what would that be?
So yeah, that's a great question, and I could probably talk for hours on that, specifically because it's something that's become more of a extreme hobby for me at the moment, and that is studying and watching where we are going with quantum computing. And this is where I think that we're going to blow the socks off of everything that we currently know as secure. Because quantum computing essentially renders all of that obsolete. Now there's a counter to that with, we have quantum computing, we should be able to have quantum cryptography. And so those two things I think are, to me, the most exciting moving forward. And I honestly love watching this, quantum supremacy race happen. Although I question, what we label as supremacy, needs to be fully verified. But all these companies doing that right now, specifically Google, and the way that they're doing it, I think that there's major applications for blockchain in this, because we will immediately have to create some type of quantum cryptography that can handle the ability for quantum computers to essentially break any standard type of SHA that we use right now. But On that same vein, though, that also opens up the door for many other things that I think are equally as exciting. And that is, if I get away from blockchain for just a second, it's more on like the molecular modeling of, things like coronavirus, things like medicines that could fix and help us with coronavirus. Those are actively being talked about right now by these tech giants on how they can use what they currently have, although they're vastly underdeveloped to be able to handle this, but they may be able to do something with that could model. And the whole problem is that the current state of standard computing, we cannot model molecules to that level, because essentially you're trying to model something in a binary system that operates in a quantum system. And so you technically, in order to be able to model a molecule or to be able to test specific compounds, you have to do that. You have to use a quantum computer for that. So I'm excited. I'm honestly, it's the most exciting thing in my life right now. I cannot wait for us to be able to use and watch how quantum computing changes our lives moving forward, especially in blockchain and cryptocurrencies and finance in general and security. So that's probably where my most excitement comes from.
Ryan, on a 10-second answer on the quantum computing timeline, once we hit quantum computing, how close are we to singularity in 10 seconds?
Probably, I would say a year less.
Wow.
And again, 10 seconds or less. The quantum computing that it would take to do that would need to be on the level that we currently see normal computing, right? That level of adoption. But once we get there, we're very close.
Okay.
Wow.
Sorry for getting in your way there, Mike. Go ahead.
No, not at all. That's fascinating. I feel like within kind of the crypto community, if you will, every once in a while, the quantum discussion comes up and everybody gets completely terrified that it's just gonna destroy Bitcoin and crypto in a lot of ways. Now, my final question before I pitch it back over to you, Q. Mike, you obviously have, decades worth of financial experience. And one of my personal concerns with that way that this brand new technology interacts as really still a nascent public market has always been that inherent greed and speculation will do more negatively to the technology, specifically Bitcoin and other publicly traded assets, crypto assets, than it would help. And last, I guess it was about a year ago, we brought this question up to the infamous Arthur Hayes of BitMEX. And, of course, his perspective was that speculation is a good thing. It's needed in crypto because it brings in people, hopefully educates people. It gets people interested in this brand new asset of sorts, being whether it be Bitcoin or Ethereum or whatnot. So, I know it's kind of a difficult question to answer, but as you look out into the future, as crypto hopefully evolves as this brand new financial asset in a lot of ways, do you think that speculation could inevitably harm crypto too much, or do you think it's something that will be okay as we continue into the future?
Well, it's a great question. Although I wish you'd ask me first, because when Ryan goes on like that, when I come on, I feel like I'm speaking in crayon. But yeah, look, speculation, man, great question. So there's 2 points to that, and that is speculation is great because in the first premise, when you have a trading asset, look, for the success of in stocks, a trading asset is a bankable asset, and over here, you need speculation to create a secondary market which boosts liquidity for these things. Okay, and so when you have like ETH that is consumed as you're using it, right, and the other ones, so there's the utility there in that as you are building on the Ethereum blockchain, you're using ETH alongside it. That creates the need for you to go and purchase more. So there's an inherent buy. There's basic liquidity there, but it really gains in popularity when people start to give it a life beyond that, and it has a unit of applied unit of value that we can transfer between ourselves. So that becomes speculation. That adds to liquidity. But the issue that needs to be looked at, in our opinion, is that the financial instruments that are being brought into the crypto world have been in the securities world for hundreds of years, and they were built over time as need dictated, right? So, and when you look how they're being brought into the crypto world, it's really, it creates a huge moral hazard in terms of, you know, not can we, but should we, right? Because when you look at, sorry, where was it? Can they build it or should they build it? When you look at when you look at how the futures, came about with Bitcoin, cash settlement only futures. Okay. Well, when futures started in the commodities world, it was physical settlement only, and cash, you know, because it was farmers. It wasn't speculation. It was a hedging tool, not a speculation tool. Right. And so how that evolved into cash settlement where speculators could use it so that they didn't, you know, they had more protection so that if you got on the wrong side of a trade, you didn't end up with 1,000 pigs, right? Or cows or bushels of wheat, right? You didn't end up with that stuff. You were able to cash settlement out if you got lost behind a trade. Well, they started out with cash settlements in crypto. So it's almost like a Frankenstein of sorts. They're bringing these highly sophisticated investing tools into the world of crypto, and crypto traders in general are not, they don't have the experience that the securities world has, right? And so these tools are being made available, but it's like somebody who is just learning how to drive and you're handing them a Ferrari, all right, or a McLaren or something that's really difficult to drive. There needs to be an evolutionary process by which we figure out what tools are actually needed in this space. And that creates a really big problem between really where the world of crypto is going and what the securities world is doing, because the securities world has the might and the power to shove a square peg through a round hole. So they are able to take where crypto is going, and really what the securities world, and this is kind of tin hatty, but what the securities world is doing is they really want to create products to sell to their customers. That's really where we're going with this. And they don't even need to be very good products. Okay. You're taking something that's, you know, I guess wholesome and pure in terms of Bitcoin and what Bitcoin is. You could transfer the value peer to peer, and it really does some great things around the world. Big banks are looking at this as, look, how do we sell this to our customers? How can we participate in this? And that's where their massive CapEx spend for it to get into the space was, so they could do it. I remember when Ryan and I were at TCC, we had a prop trading desk going, and Goldman Sachs had announced that they were going to do a prop trading desk in about 6 months. And we went out and publicly said, there's no way they're going to be able to do it. There's no way the attorneys will approve it, but they needed to get into the game. And sure enough, they ended up canceling that deal. And you'll see, and if I can draw a comparison to you, and again, it gets a little tin hatty, but it really speaks to your point. I'm sorry to kind of take you around the barn on this.
No, it's great.
When you look back on, if you guys saw The Big Short, or read the book,
Flash Boys.
Pardon me?
Flash Boys?
No, it's the same author. But The Big Short, and it talked about during the financial crisis 10 years ago, or the housing crisis went down. So you had the credit default swaps. You had the subprime lenders that were going out of business left and right, but the credit default swaps, which are supposed to be ballooning in price, would not move. And why? Because the big banks, if they truly marked those to market, they would have been crushed. And so they illegally held them at a certain value until they were able to put themselves out of harm's way, and then B, able to position their chess pieces on the board so they could make money on this. And as soon as that happened, the default swap started to swell in price. And that's why Goldman Sachs ended up paying, I think, $500 million fine coming out of that thing, because they bet against the market and they held it up. People should have gone to jail over that. Well, the same thing really applies. I see this in the crypto world. I mean, the big banks are tied to big government, and they end up controlling the SEC. And I think that there was a lot of pressure from big banks to have the SEC really, stranglehold what was going on in crypto, to slow it down until those banks could actually get their infrastructure plays in place so they can make money on it and push it down. And now that they can, they're absolutely fine with this thing going back up to 20, 30, 50,000, because now they have their pieces in place and they can do it. They're going to want to get some ETFs and some more retail products out there so they can make money, but really that's the way they see it. So does that answer in a long-winded way your question?
Yeah, for sure. That's absolutely fascinating. I think that interior kind of background experience from 2008 versus where we are now, I think a lot of people would agree, especially those trying to get ETFs approved, Bitcoin ETFs approved, would very much kind of follow that last piece you said there. So yeah, this has been fascinating. This is yet another interview here where I feel like we could talk for hours and hours and hours, if not days, and we definitely want to get you guys back on. Q, before we let these gentlemen go, was there anything else that you wanted to hit on?
I did have a question about what sectors within specifically crypto you guys think could emerge in the future. I know you talked about just investing in like blockchain infrastructure companies that aren't necessarily associated with crypto, and I think that is a interesting kind of dynamic within crypto. People are always clamoring for mass adoption, for companies to really push this stuff, and yet IBM's on just any old TV ad talking about how they're pushing their blockchain forward. No one seems to care about that. But it is a great thesis. I do appreciate that. Any sectors you guys think within crypto specifically that could take off? I know DeFi has been a big thing. I know gaming. I know NFTs have started to make their way into the forefront a little bit. Any ideas there about what could emerge from specifically the cryptocurrency industry?
Yeah, I'll go first and I'll let Ryan finish it off real quickly. But it's one of the big things for us is that the blockchain will really gain consumer adoption on a real massive level when the average person walking down the street, if you ask them, how has blockchain affected your life? And they'll be able to have an answer for you. All right, something along those lines. And when you get into deep tech, real cutting edge stuff, tip of the spear, most people are way far behind that yesterday. I mean, I was on the phone with a guy yesterday who we're negotiating the purchase of the company on behalf of another client because we do some M&A work as well. And his private email address was still an AOL address. And so, getting from, Wall Street to Main Street and that stuff is really important. And so one of the areas that we're focused on right now, and I can't get too much in the weeds in it, but if you want to stay close to us, we'll get back to you in maybe 90, 120 days, but the real estate market. The real estate market is something that everybody understands. And it's usually the largest financial transaction in the average person's life, the buying, selling, or refinancing of a home. Everybody is familiar with real estate. Everybody understands the concepts of it. And bringing blockchain to certain aspects of the real estate vertical is really going to help get this in the common vernacular. So people are no longer afraid of this, tomorrow stuff. You don't have that Good Morning America show where they ask, what is the internet or what is email, right? What's the the Greg Gumbel thing. So that's really what we're focused on, is making sure that, we're finding areas where blockchain can apply to the everyday person on a massive scale and brings about some change in some industries that have really held out from the technology change. And real estate is one of those industries. So Ryan, I'll leave it if you want to go from there.
Yeah, that's a good point. I mean, we could sit and talk about federated blockchains and the fact that those are up and comers, I think, in more use cases in America. But one that in less of a blockchain aspect, more of a cryptocurrency aspect, I also am just going to throw that lot in with real estate, not particularly residential, but and there are a couple of companies doing this right now, or at least trying to. And I think there's a way to do it, but commercial real estate, tokenizing the value of commercial real estate, those larger valued buildings, and allowing people to get in and out more quickly and easily is something that I think we'll start to see more of in 2020 and 2021, assuming our standard of life continues. But there's, and I cannot think of it off the top of my head, I was looking for it just now, but there's a company out of SF that's starting to do this now, and they're seeing some good success on it. And imagine not having $10 million to be able to take part in buying an apartment complex, but I can tokenize it and get in and out more quickly, own a small percentage of it. And I think that is going to become more and more popular in the way that these larger buildings are funded. And any business that may want to do a build out or do a purchase could essentially, for lack of a better explanation, ICO this particular token for a building and sell it that way in more of a crowdfunded manner. Instead of going out and trying to find bank funding for $20 million building, they would have the opportunity to do it this way. So that's really one of the areas I think that's going to be, very much, more and more companies will start to offer that moving forward.
And if you think what he just said, take that along the lines of asset transfer, estate planning transfer, being able to, transfer assets, for tax purposes and whatnot. A tokenized transaction is infinitely larger than just getting done a large real estate transaction, than selling 20% interest in a $50 million building. You can just sell the tokens on an exchange, and the entire transaction is done in a minute, as opposed to a month and $50,000 in legal fees.
Yeah.
Gotcha. Yeah, we had Ed Nowakity when we were at ICO Alert. I think it was in 2017. We were like heavily involved in that ICO phase, and Ed Nowakity actually heads up Red Swan, which I think is the company that you're talking about. Guys, awesome interview. We have one last question we always ask every guest to recommend a book. It doesn't have to be crypto. It doesn't have to be blockchain. It doesn't have to be nonfiction. It could be anything you'd like to get out to our listeners.
Liar's Poker by Dan Lewis. Michael Lewis, sorry. He's the guy who wrote The Big Short. He wrote Flash Boys, but his very first book, Liar's Poker, that was autobiographical. And I think it's still its finest work. And it is, well, it reminds me of when I got into the business. I got into the death rattle of the 80s, that last bastion of having telephones thrown at your head and Wolf of Wall Street shit. But it's an incredible read. It's an incredible read. I don't know, Ryan, if you have a book that you recommend.
Yeah, actually, the Flash Boys is probably one of my favorites. It's also written by Michael Lewis, but it's specifically around the the advent and the growth of high frequency trading in the capital markets. And then the other one that I recommend to everybody, just because of how well it is put together, even though it is fiction, is Digital Fortress, and it's by Dan Brown, the whole Angels and Demons guy. But he wrote a book called Digital Fortress. It is specifically about what we're talking about: cryptography, the usage on a national level, the stuff going on in the National Security Agency. It's a great book. There's a lot of good factual information that surrounds the fictional story. So.
Got it. Awesome. Yeah. Have read Flash Boys myself. Haven't gotten to Liar's Poker yet. So we'll definitely add that one, as well as Digital Fortress. Listen, gentlemen, this has been fantastic. Mike, before we let you go, for those who are interested in connecting with you and with Terraform Capital, what's the best way to do that? Whether it be website, social media, whatever.
We have a landing page. We're a friends and family fund, and we typically don't advertise, so we don't have big marketing materials. I mean, again, it's just if you know us, but people can email me, mp2@terraform.capital. Email me directly, and Ryan's at ryan@terraform.capital. Email us both with questions, and happy to entertain it. And guys, thank you very much. Really appreciate it. And I saw that you had my good friend Alex Mashinsky on. He's always a treat. He's a great guest. So
yeah, Alex was amazing, man. Alex had a lot of cool insights, and he's a great talker too. So it was good to have him on.
He is the best front man for the entire industry. He's a wonderful speaker, and congrats for having him on.
That's fair. Yeah, thank you. Thanks, guys.
Hey guys, cheers. Stay safe through all this. Take care, guys.
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer 1 on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.